Howdy! I want to go over today underwriting. How do we review a potential property to see if it's a deal for us and it's something that we want to take on? Now, when you're doing notes, what's most important is what's called your cash on cash return. So if I spend $10,000 to buy the property, what is my return on an annual basis? So if I get a 50% return, that means if I spent $10,000, in the first year I got $5,000 back. So in 2 years, I got my full 10. After that is profit. Now, one of the best ways to calculate that, so let's look at a deal here. We have a property. This is a mortgage statement that came into us today, and they owe about $33,000 to get the loan current. Now, this is not currently in foreclosure. This is just a monthly statement, not a reinstatement. Realistically, I'm going to see 33 here. I'm going to assume it's closer to 35 by the time I get it brought current. With my closing costs, it's going to cost me about 37 to buy this property. This seller's not getting any money on top. If they were, that number would go on top of it. But I know the seller just wants their credit saved and into a better spot. So my all in here is $37,500. Now this property, I know that we can sell as is, where is, because I've gone through photos, I've done comps, I know what the house looks like, for about $230,000. And if we get 10% down, it would be $23,000. Let's always assume the worst. Let's say we only get 20 down as a down payment. So now, if I'm in it for $37,500, but I get 20 down, I'm only in it for $17,500. Now let's assume some hold costs, some other overhead. Let's make that $20,000 that I'm in the property after I've resold it, because that's when you determine your cash on cash, is after you've sold the home. So the way you go about calculating that is you first have to determine how much your debt is and what you're going to be able to resell it. So there are a couple of variables you need to know. What is your ARV? What do you realistically think you'll get as a down payment when you resell the home? What interest rate can you sell it for in that area, that neighborhood? And all those are variables. Sometimes you are willing to hold it longer to find the right buyer. Usually that's not the best idea. Usually when you get the right buyer, take action, don't wait around. Things don't usually get better over time, and that holding cost and that holding time, that opportunity cost, can be far too high. Don't take that. If I sell this for $230,000 and I get 20 down, that means I finance $210,000. That's the debt that they're gonna take. I think I can sell that conservatively at 8.5. I think I'll sell it for a little bit higher, but I'm gonna go a little low on a 30-year note. That means I'm gonna cash flow 16, 14 out of that property. Now I'm gonna go and take away the underlying debt, principal and interest. Escrow, the buyer pays. That's not something we have to calculate. We're only looking at what our interest and principal payments are on the underlying debt. So here I've got a $274.01 and a $624.42. So that means that my cash flow is $716. Now I'm gonna annualize that. That means I make $8,500 a year. Now divide that by the $20,000 that it cost me to do it. That's a 43% cash on cash. That's a good return. When we're doing a deal, we don't take on a deal if when we first underwrite it, it comes in less than 40. Deals always get worse over time. Start off at 40 because our real number is 33 1/3. Meaning at 3 years, we break even, and from then it's profit. When underwriting the deal, I always assume low down payment, lower interest rate, low sales price, long hold time. Always worst case it, because Murphy's Law is a real thing. It will happen to you because it happens to me constantly. That's why if I do a worst case and I come in north of 40, I think that I'm probably pretty safe, and I'll always end up above my 1/3 or a 3-year cash on cash return. Always plan for a worse and hope for the best. This is the deal that we're gonna do. We're about to contract close on it and make it happen. Helping another family, building our portfolio, and making it a win. Happy investing. If you have questions about real estate investing, owner financing, or any other aspects, don't hesitate to shoot us a message or make a comment on a video. Don't forget to subscribe to our YouTube channel and follow us on the other social platforms to stay updated on the ever-changing real estate market.